All four major indices are approaching critical support, which means now is not the time to be getting bearish. First up, let's take a look at a daily chart of the S&P 500 SPY ETF. So let's crack open this chart, see what's going on in the stock market today. All right. Today we're going to focus on all four of the major indices because all four major indices are approaching critical support, and because we're in pull trends, you never want to get bearish at critical support. So going into last week, I said the expectation was a pullback down into 430, and from there we would likely continue higher towards 450, even though I did give the possibility to hit the trend line down here right around 426 to 427. So whether or not this pullback is over is to be determined, but we are now approaching the critical support zone, which means the time to be bearish is now over. And if you shorted up here from resistance, now is the time to lock in profit, because we are very likely going to put in a higher low before the next higher high. Now that is the bull trend scenario, and this is very simple to understand how we could put in a higher low, hit support, and then bounce and continue the bull trend. But the other scenario, which is the bearish scenario, is that we come down towards this support, bounce to a lower high, and then continue to break down and go through a full-blown correction. In this scenario, we need to wait for price action to confirm it, because in both scenarios, the bullish and the bearish scenario, we are going to get this bounce from some support zone down here around critical support. It's going to be a question of whether or not that brings us to a higher high breakout or a lower high rejection from resistance into a lower low breakdown into lower prices. So I talked about this in great deal over the weekend, and I told you how you cannot assume this is going to happen because we are in a bull trend off of the lows, which I talked about from the weekly chart analysis. You need price action to prove we are breaking out of the bull trend, and only a lower high into a lower low can tell us that something else is happening and we are no longer in the higher low, higher high situation. So if you want to get bearish, you are going to need to be patient, because right now, as we're approaching critical support, is the time to lock in profits on any short positions. And if we are going to get another opportunity to short this market, it is going to be on the breakdown below critical support. Calling critical support on the S&P 500 between 426 and 430 on the daily chart. And if we start breaking those support levels, we instantly need to expect the bull trend is getting a lot weaker, and we're opening up the opportunity to go into a downtrend. Remember, I tell you, let the price action do all the talking, and guessing we're going to break down is not letting the price action do the talking. So far, the price action has proved all year that we're in a bull trend, so we are going to give all of the benefit of the doubt to the bulls, which means as we're approaching critical support, it could be a buying opportunity for long trades. So watch critical support at 429 to 430, and if we break that, we're going to hit this support trend line between 426 and 427. And if we slice through all of that support, we're instantly getting a lot more risk off and a lot more bearish, and then we'll be expecting to put in a lower high on a rejection into the next lower low. Now to the upside, we're still looking for resistance right around 436 to the gap fill just below 439 and the previous daily high just above 442. Also pay attention to the fact that we are going down on decreasing volume, and anytime you're getting a pullback on decreasing volume, it tells you that there are not motivated sellers, and it could simply just be a pullback, which is the most bullish scenario you're looking for in a bull trend to get a low volume sell-off. Low volume selling is a pullback, and they are completely normal. You can see plenty of pullbacks on this chart before we continued higher. And now that we're getting that pullback into critical support, and we're not getting the high volume selling, and we're not yet slicing through critical support, this is not the time to be getting overly bearish. Also take note that we're approaching the rising 20 daily moving average, which means we are officially reverting back to the mean after closing outside the upper Bollinger Band, and this is where you are going to start seeing buyers stepping back into this market. And if we fail to see the buyers, then we're going to know something else is happening, and we can instantly get a lot more risk off. On the NASDAQ 100 triple Qs, we were down 1.34% today, and the triple Qs are also approaching the critical support zone, which is the zone between 355 and 358. And 358 is exactly where the rising 20 daily moving average is today. So in this support zone, you can see it's very similar to SPY, which we're looking for a pullback to 430. On the triple Qs, we're looking for a pullback to retest the breakout at 355. Now the bullish scenario is that this is our higher low before we go put in the next higher high. And then in the bearish scenario, we will be looking for that lower high rejection, which only time is going to tell us whether or not we get it. And then we will be looking for that bearish breakdown below support, break down through critical support between 355 and 347, and then come down here and close this gap at 333. This is the full-blown tech correction, which I'm not ruling out, but price action is going to have to confirm it, which means we're going to need to bounce into a lower high and then break critical support, and then we'll be looking for that full-blown correction. Do not rule out the possibility of a higher low into a higher high because we have the bull trend. You do want to give all of the benefit to the trend because the trend is your friend until the end, and if we lose the trend, we are going to see it in the price action. We're going to see lower highs and lower lows, and we're going to break through critical support. So nothing needs to be said other than simply waiting and being patient here and letting the price action do all the talking. You could see we did have a slight uptick in volume today, but overall we do have relatively low volume into this pullback as we're approaching critical support, which is the most bullish scenario you can possibly wish for. Also take note, our Bollinger Bands are starting to squeeze, so we could see some consolidation around this critical support before the next major move in this market. Jumping over to the Dow Jones, we were flat on the day, and I told you last week the Dow Jones was closing at critical support, so we would likely get the first information in the Dow, but as you can see, we really didn't go anywhere, and we are still sitting on critical support, so we are starting to get this confluence of all of the indices starting to reach critical support at the same exact moment. This is the perfect scenario because it's going to be very simple to follow price action from here because all of the indices are now telling us the same exact story. There was a time in the market this year where some of the indices were giving different looks and it was very confusing on where the market's going, but now all of the indices are aligned and it's very obvious that they're all in bull trends and they're all approaching critical support at the same time. So in the Dow Jones, that critical support is going to be 336, and if we break 336, we are instantly getting a lot weaker of a bull trend because we're breaking critical support, which is right there at that rising 50 EMA. You can see the moving averages are starting to bunch up between the zone of 337 up to about 339, and that is going to be a very strong resistance or support zone. So if we start to get the bounce, it's instantly more bullish, and then we'll be looking for the gap fill just below 343. If we break support, then we're likely coming all the way back down towards 327, and that is all going to depend on whether or not price action can hold above 336 or if it slices right through it like it's not even there. As you can see, the volume on the Dow Jones is also extremely low, which is very bullish when you get these low volume pullbacks into critical support. And I do think there is a very strong chance that this all resolves to the upside and these all become higher lows before the next higher high. And then finally, let's jump over to the small caps Russell 2000 IWM ETF, and we can see the small caps are also at critical support. And again, this is all coming from a higher low breakout into a higher high. We got rejected from the critical resistance at 188, and we're back down to critical support at the rising 50 EMA and the 200 daily moving average, which is all bunched up right around 180. The breakout of critical support is just above 178, and then we have the zone between 178 and 180 that I consider critical support. So if this support level holds, then we'll be looking for a higher high breakout. But as I continue to tell you, there's also the bearish scenario of getting rejected from a lower high and then break down to a lower low. And then we could instantly say we're losing these bull trends and we're going back into a downtrend, but only price action can prove it. And that is going to require lower highs and a break of critical support, and only price action can confirm that. So we just went through all four major indices, and all four major indices are telling us the same exact stories of bull trends approaching critical support. So I'm warning you right now, if you are still bearish and you are still shorting this market heavily, you need to manage your risk because shorting at support is very difficult to manage risk from. You should be getting in the habit of locking your profits on short positions as we approach support, and that is currently the situation we find ourselves in. And then very quickly, let's look at the VIX, and we can see we are still below 15, and if we are going into some massive fierce sell-off, we are going to see the VIX spiking out above 18 and 20, and so far we still have a bear trend in the VIX, and we are still trading below 15, which tells us this is a low fear bull trending environment. On Bitcoin, we're finding resistance at the previous high, which we did break, which was that high at 30,500. So even on Bitcoin, I think there's a good chance we're just going to get a pullback before we continue higher. And I do have that outstanding price target at 35,000. So in Bitcoin, watch that critical support at the breakout at 29,000 and 28,000. And any pullback into that zone is likely going to be a higher low before the next higher high because we do have the bull trend. And then, of course, we have Apple stock, which is our market moving stock. And today we did break out to yet another all-time high. But as you can see from the candle, we did not hold that price action and we closed near the low of the day. But all is fine and well as long as we continue to close above the breakout at 185 and 182. The critical support in Apple is 182. And if we break below it, we are likely going to see a full-blown correction in Apple that could take us back down towards 170 and the gap fill at 167. But we have to break that critical support at 182. If we don't break support and we bounce right off of it, we're looking for the next upside target right around 190. And that is likely where we'll have the next opportunity to see high volume selling because right now the volume is starting to drop off as we approach support. So jumping back over the S&P 500, tonight I just want to focus on the major indices because I want you to have a crystal clear understanding that all four major indices are in bull trends approaching critical support. So you need to let the price action do all of the talking from here. We got the pullback from the overextended conditions, and it's been mostly on lower volume. And when you're getting low volume pullbacks in bull trends, you don't want to get overly bearish as you approach support. So if you're still shorting this market, be very cautious and consider locking in profits at support, because you can always re-short the market if we break through support and confirm a bear trend. So manage your risk right here at these critical levels and understand the greater degree of the trend, and this is still a bull market year until it's not, and we are still in bull trends until price action proves otherwise. So check your bias at the door and let the price action do all the talking, and you are going to do very well in this market. Don't forget I have my own trade alert service called Bank Trade Alerts that sends you all of your buy and sell alerts directly via email and text message, and I also have the Stocks Channel Trading Discord community. You can find out more information or learn how to subscribe to either service by clicking on the links in the description of this video. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.